Thank you for joining me. I'm Alex, and I want to talk about Cirrus Logic. So Cirrus Logic makes computer chips, which means mostly for cell phones, but also kind of, sort of, a little bit for computers, not mainstream machines though, really. They focus mainly on graphics and sound chips, and they're actually in a lot of smartphones right now. Current price is $60.69, nice, which gives them a market cap of $3.5 billion. Dividend is 0. I don't expect that to change anytime soon. Current revenue $1.3 billion, earnings $159 million, both up significantly. Revenue actually slightly more than it looks, but I don't know where to round things, so I don't have to have the numbers completely covering the whole screen, so gonna just have to deal with it. Current PE is 21, forward PE is 20, which is actually pretty decent. Obviously a lot of tech stocks right now have PE of like 950 if you want to look at Tesla. Total assets $1.6 billion, total liabilities $636 million, which gives them total stockholders' equity of $1.3 billion, which is not great necessarily, but considering their market cap is only $3.5 billion, and stockholders' equity of $1.3 billion is pretty nice, and you can expect them to actually discount things at a reasonable rate. So I wouldn't be too surprised if the asset value is actually close to the current value of their assets. So overall, I would say that with the PE being where it is, I think it's a pretty interesting stock for a lot of people. Obviously, growth investors don't really find the stock interesting right now because new smartphones are really not something that people buy during a global recession, and that might be a bit of a problem, but I don't expect that to be a long-term problem. So if you intend on owning the stock for a while, I'm guessing that kind of sort of doesn't make you a growth investor, but still I think it's probably still a pretty decent stock, especially a stock to diversify into. So overall, like as a growth stock, I don't think I would recommend it at this time. For a dividend investor, I definitely also wouldn't recommend this at this time because there's no dividend. For a value investor, the balance sheet looks pretty nice, the PE looks pretty nice, the revenue and earnings are growing, and so I think overall for a value investor, this is a pretty decent stock, and especially with tech stocks doing as well as they are currently, finding something with a PE of 20 or 21 is pretty hard these days, especially in this sector. So definitely look into this one and see if there's something you like. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.